2015 proved to be another busy year for the commercial property market in Northern Ireland, following a particularly strong performance in 2014. A healthy level of transactional activity was recorded in both the occupational and investment sectors of the market during the year. As is usually the case in Northern Ireland, the largest proportion of activity in most sectors was recorded in the second half of the year. As a result of a shortage of Grade A accommodation, take-up in the office sector in Belfast was slightly down on the previous year, reaching almost 310,000 square foot during 2015. Much of this activity occurred in the second half of the year, with several transactions completed just before year-end. With the scarcity of modern office accommodation continuing to prevail during the year, it was encouraging to see some speculative development commencing in the Belfast market during the last 12-month period. One of the most positive developments to occur in 2015 was the transfer of planning powers to the local councils, which should speed up the planning process and bring a more commercial focus to planning. Last year also saw increased appetite from retail occupiers, with this activity particularly evident in Belfast and larger towns across the region. In addition to the expansion of some existing occupiers, several new entrants commenced trading in Northern Ireland over the last 12-month period, and there was a marked improvement in occupancy in some of the main shopping centres, retail parks and high streets during 2015. Over the course of the year, this started to filter down to some secondary and provincial locations in the region. The rates revaluation, which took place last April, benefited many retailers across Northern Ireland, leading to significantly reduced rates bills in many instances. Take-up in the industrial sector was compromised by a lack of modern buildings in prime locations, which in turn saw prime industrial rents rising for the first time in several years. All occupied sectors in Northern Ireland experienced a rise in prime rents during 2015, with prime office rents in Belfast having increased to £16 per square foot during the year, prime high street rents having increased to £115 per square foot, and prime industrial rents reaching £3.50 by year-end. Following a very strong year in 2014, there was continued activity in the investment sector of the market last year, with transactional activity reaching approximately £400 million as a result of continued deleveraging activity and secondary trading. Investors were particularly encouraged by the relative affordability of real estate in Northern Ireland compared with regional UK cities, with prime yields in the Northern Ireland market having remained stable during the last 12 months. The bulk of investment activity in the region during the year emanated from private equity buyers and institutional investors, with the vast majority of transactions comprising shopping centres and retail parks. As has been the case over the last number of years, we saw several new entrants to the Northern Ireland market during 2015. One of the trends that became increasingly evident in the Northern Ireland property market over the course of the last 12 months was an improvement in the availability of debt funding, which is encouraging. However, the availability of funding for speculative development remained difficult and is likely to do so for some time yet, other than where pre-lettings are secured. Tourist activity increased year on year, which in turn benefited the hotel and leisure sector of the economy, leading to an improvement in hotel performance figures across Northern Ireland. This in turn led to value improvements in hotel and leisure properties. There was a notable improvement in transactional activity in this sector of the market over the course of the last 12 months, with as many as 10 hotels changing hands in Northern Ireland during 2015. Towards the end of the year, the Stormont Assembly announced details of the Fresh Start programme, which was very well received and bodes well for continued activity in the commercial property sector in the region over the next couple of years. The significance of having clarity on political stability and a date for the introduction of a reduced rate of corporation tax cannot be underestimated. 2016 will see the commercial property market in Northern Ireland moving to the next stage of recovery, with an escalation in development activity becoming increasingly evident, most notably in the offices, hotels and student accommodation sectors in Belfast, where several new schemes are expected to lodge planning applications or commence construction over the course of the next 12 months. The office sector is at a more advanced stage of the cycle, and we expect to see an increase in the number of office projects entering the planning process during 2016, as the viability of new development improves in line with rental value improvements. A small volume of new office stock is scheduled to be delivered this year, but many of the larger schemes will not be completed until 2017 at the earliest, which will continue to put upward pressure on rental values in this sector until there is a meaningful improvement in supply. Indeed, we expect to see prime office rents in Belfast increasing from £16 per square foot to £18 per square foot over the course of the next 12 months. Considering the greater emphasis on development, we expect that there will be an increase in forward funding transactions this year. The biggest challenge in the retail sector in 2016 will be securing stores for retailers in many of the most highly sought-after schemes and high streets, considering that many of these schemes are close to or are at full occupancy. We therefore expect to see some further growth in retail rents in prime shopping centres and high streets this year, and expect to see more lease re-gears in the retail sector of the economy. Although we believe that they will see signs of retail recovery increasingly filtering down to provincial locations over the course of the next 12 months, we're not anticipating rental growth other than in prime locations. We also expect to see some further pressure on prime industrial rents in 2016, rising to approximately £4.50 per square foot. However, rents will not rise to the point where speculative development is viable, and so for this reason, we are not expecting to see new industrial accommodation emerging, other than specific expansion and design and build projects. We expect to see strong volumes of activity in the investment sector again in 2016. As deleveraging efforts wind down, it is inevitable that a greater proportion of transactional activity will emanate from secondary trading, as private equity firms continue to implement their exit strategies, and many of the assets and portfolios purchased over the last number of years are retraded and refinanced. In addition to acquiring assets, investors will now broaden their focus to maximise income generation from existing assets and concentrate on potential development opportunities. Although we may see interest rates rising before year-end, prime yields are for the most part expected to remain stable this year. There may, however, be some slight compression experienced in the office sector if prime rents rise at the pace anticipated. Tourist numbers are expected to reach 2 million visitors during 2016, which will bring benefits for the hotel and leisure sector of the Northern Ireland market, and encourage more hotel operators and investors to consider opportunities in this market. We are, however, urging caution, as there's potential for oversupply if all hotel schemes in the planning process materialise. This is also a concern in the student accommodation sector, with a significant increase in the number of proposed schemes compared to the last number of years. The announcement that the Northern Ireland Executive intend to lower the rate of corporation tax in Northern Ireland to 12.5% in April 2018 to match that currently prevailing in the Republic is hugely significant. The change to corporation tax has the potential to be a game changer for the Northern Ireland economy and in turn its property market. The work to ensure that the region is poised to derive maximum benefit from this significant change needs to commence in 2016. This is to ensure that the necessary buildings, infrastructure, labour force and skill sets are available by the time it is implemented as planned in April 2018. We expect to see some further improvement in the availability of debt funding over the course of the next 12 months. Although there are some concerns about the potential impact of public sector and welfare reforms on the Northern Ireland economy in the medium term, the biggest potential threats at this juncture are external, with macroeconomic conditions and geopolitical risks of particular concern. The European referendum on Brexit, which is expected to take place in 2016, and the US presidential election in November will potentially have a larger bearing on the local commercial property market over the medium term than domestic factors.